Hello, everyone. I'm John Soroka with Soroka Brand Development and the Mortgage Innovation Committee Chair, and welcome to our webinar today about how to reduce your mortgage manufacturing costs with eClose Tech. The Mortgage Innovation Committee is dedicated to helping prepare members and the mortgage industry as a whole for the unique challenges we're facing now and in the future. But before we get started, I'd like to share a bit of information about the upcoming Mortgage Innovators Conference in case there's anybody here on this call who has not yet registered. First of all, there's going to be a lot of great content to address issues all lenders are facing on many topics, including increasing your margins, improving the customer experience, new products, and fair lending. There will be demos of the hottest technology solutions in the mortgage industry that exist today. And truly, this conference, I have to tell you, it's the best deal in the industry with low registration fees for very high quality content. This will be a riveting experience and the best party in the mortgage industry, and it's happening from May 2nd to the May 4th. So be sure you get registered for that if you're not already. Okay, so today we will cover how eClose Tech integrates with different systems, real data on how eClose reduces turn times, how to drive adoption, what you should look for in an eClose vendor, and a whole lot more. So with us today, I am thrilled to present to you Camelia Martin of SnapDocs, Brendan Weiss of Escrow Tab, and Jay Arnea of Simple Nexus. Jay, I hope I said your name correctly. Did I?
Perfect.
Okay, great. And today's moderator and the Innovation Committee Vice Chair, Greg McElroy of AmeriHome Mortgage. So with that, over to you, Greg.
That's great. Hey, thanks, John. Love the energy, and thanks for the introduction. Thanks, everyone, for attending, and thank you in advance to our panelists for what I know is going to be some great input here. We're going to go ahead and kick this off. The introduction of the panelists already there, but let's just talk about the e-mortgage process, right? You can think of it as a journey. At least that's the way I think of it. Starting with e-closing, going through the e-note, and eventually to the complete e-mortgage, which includes a lot of other things, including the vault and the remote online notarization at some point, right? So it's a journey there, and it depends upon where you are in the process, so what works best for you next. So we'll talk a little bit about that. What are the benefits of the e-closing? Well, certainly speed, accuracy, client service, and cost reduction would be the top topics there. You shorten your turn times. You don't have to wait for documents to get to A to B. It's all done electronically. You don't have lost documents or missing signatures because it's all included online and stored. Client service can be multiple things, but it certainly allows their borrowers to review documents a little bit ahead of time of the closing, as well as, again, it gets done faster. And then, of course, the cost reduction, not having to store documents and transfer documents and all the things related to that is certainly where a lot of the benefits would lie. What does it take to get engaged in the e-mortgage process, right? Well, first off, you have to have GSE approval. Both Fannie and Freddie require approval in advance. So that's something you would have to undertake, certainly from the entire e-mortgage and e-note perspective. But it does take advance notification. It takes partner commitment. Everyone you work with to get a loan closed has to be bought into the process and partner with you on this. That's your closing agents, again, the notary, recording, warehouse lenders, document custodians, servicers, investors, etc. They have to be bought in and part of your service chain. You have to have approved technology service providers, right? This is required by Fannie and Freddie. They have lists on both of their sites and some great resources to help you get started with this. But this certainly would be your doc prep, your eClose systems, your eVault, your MERS registry, your LOS integration, things like that would fit into the bucket here. The cool thing about it is we've got 3 of the approved technology service providers on the line with us today, and I know we're going to have some great input. So with that, I want to turn to our panelists and ask you to introduce yourselves and tell us how your company supports the eClose e-mortgage process. And we'll kick it off with Camelia from SnapDocs. Camelia?
Thanks, Greg. Hi, everyone. Camelia Martin.
I head up industry and regulatory affairs for SnapDocs. And SnapDocs is a digital closing solution that provides end-to-end technology products and services to lenders as they look to digitize 100% of their closings.
Great. And next up, Jay.
Hey, Greg, thank you. Thank you for having me here. And from Simple Nexus. Simple Nexus, of course, is a provider of eClose solutions. We have found that there were early adopters very early on for eClose, and where the industry now is at the folks that are adopting, integrating very rapidly, and we're getting fast to a peak on eClose. If you look at our what we have established as a power of eNotes is really all the benefits that come from bringing on eNotes. Everything you mentioned, Greg, savings, partner integrations, all of that occur. And Simple Nexus itself was founded 2011. We actually are a platform that supports the entire homeownership journey. So eClose sits in the middle as a hub between our Nexus engagement, Nexus origination, and our Compensate and Nexus Vision products.
Excellent. Thanks, Jay. And then next up certainly would be Brandon. Brandon?
Thanks, Greg. I'm Brendan Weiss. I'm co-founder of EscrowTab, and we are the leading in-person electronic notarization platform in the market. Really focused on providing that e-closing offering without needing integrations with a lender's LOS and making sure that the lenders can continue to just trust the relationship that they have with their title companies today and move forward with these closings much more quickly than they've been able to do previously.
Okay, excellent. Thank you for the introductions there. All right, so kind of let's jump into the content here. So first off with this, so in kind of directing the people on the webinar here, e-closing to e-mortgage. Now I know it depends upon where each company is in the process, but let's just start at the beginning. How would someone get started here? What would be the best recommendation of, hey, if you're not doing anything, do this first, do this second, that kind of thing. And Jay, I thought you might kick us off for this.
I think some of the things you mentioned, Greg, that start with your trading partners, start establishing the conversation with your investor, your warehouse bank, your servicer, and your custodian, and then move to, once you've started that conversation, pick your solutions provider. Of course, make sure that they are approved by the GSEs. And from there, establish champions internally to make sure that you can carry on, because you don't want to go through this process to do 2 or 3 loans. You really do want to do it to scale. So work with your solution provider that you've picked and get your champions. At that point, get your trading partners, everybody together, and look to scale.
Now, when they're doing that, is that a pretty simple process? Do, you know, the companies that are engaged with, I would imagine they make it pretty easy to do, but kind of what's the process for, you know, making sure they're up and ready?
I could start with that, and then others can add on to. Is essentially you are going to meet very, I would say collaborate a lot. So when I say meet, collaborate a lot with your trading partners and with your technology providers. Bring in your title companies at the same time into the conversation, start the dialogue, and really look at implementing the tech stack, which really could be you're turning some features on, but your goal is to integrate into that ecosystem. And I think all 3 of us, our technology providers you have on here, can help lenders integrate into that ecosystem really well.
That's great.
Time in there, I agree with everything you just said. And I think if we go, you know, just depending on where lenders are on this journey, I'm sure we have lenders that are watching that maybe have started doing hybrid e-closing, some that are already doing a full e-mortgage, and maybe there are some that are just starting to dip their toes in the water. But I would say, you know, maybe even a first step is take a minute to understand, like, how digital can your organization get? This is going to depend on your geographical footprint. I think, as Jay mentioned, you got to look at your trading partner mix. You got to look at, you know, how can you be? What are the business outcomes that you're actually trying to drive towards? I think we know just on past experience that you really start to see that ROI when you start getting to eNote. But even with hybrid closings, hybrid with eNote, before you get to a fully mortgage with Ron or iPen, you can really start to see some significant lift just by getting started. So my advice is very similar to Jay's. Definitely talk to your trading partners, get a lay of the land, but focus first on the business case and the business outcomes that you're trying to drive, and just get started. So if getting started for you is, we haven't done hybrids yet, we got to start there. That's the first step. And if you've been doing hybrids, it might be time to see if you can introduce the almighty eNote into your hybrid package and really start to see that ROI build.
Yeah, that's great, Camelia. Thank you. I don't know if you coined that phrase or not, but how can you be? We need to put that on a t-shirt. We're good to go there. All right, Brandon, let's hear from you on the same thing. You know, what's your recommendation for people getting started?
Yeah, I mean, for us, it's really about the type of customer that you're talking to, right? There's been a push over the last 20 years to really expect the lender to take on the burden of moving forward with e-closings. And we at Escrow.tab have taken a different angle to it, which is that to let lenders continue to rely on the relationship they have with their title companies to drive this process forward for them. And the way that that's accomplished is by using technology that can be deployed easily without the heavy integrations with LOSs or other CRMs. The second is by making sure that it can be deployed nationwide. And you know, Ron is not a nationwide solution right now. The remote online notarization is not a nationwide solution, so we focus there. And the last piece is really lenders being able to simply say nothing more than, we want to move forward with e-closings. Title companies, what can you provide for us? And we will accept e-closings where they are legal in those states. And for us, that has been proven to be kind of a winning option for us. And the reason is because lenders don't want to typically take on more work and more problems than what they already do today, right? Like, lenders, they have plenty of things going on in their day. To take over a bigger piece of the process is not often what they're looking to do. What they are looking to do is be more efficient and make sure that the documents that they are receiving back have been QC'd, and typically in this part of the process, that means all the signatures are there, right? Because that's what a lender is receiving, those packets in their back office, and essentially doing the work that the title company should have already done for them, which is making sure that the signatures are all there. So if the technology is working right, then that can be done really without, depending on the technology provider, without any shouldering of that burden on behalf of the lender. And then as the lender wants to move forward with eNotes, take out the complication of every lender needing, you know, certain additional technology to manage something that really they're only part of the transaction for minutes of the entire game, right? Like, they're not holding, most lenders aren't holding an eNote in their eVault for very long. They are immediately transferring that off to their warehouse lender or their custodian or whoever their partner is. So let's not put all of this burden on the lenders. It doesn't need to be that way. And you can, again, kind of rely on those people that are doing that service for you today and make it much more efficient in a nationwide rollout. And then, you know, as customers get more comfortable and banks get more comfortable with remote online notarization, things will shift in that direction. But, you know, we've been through this, we've been in this game for 20 some odd years, and expecting the lenders to have to carry that burden hasn't worked. So we kind of need to take a different angle at it, and that's what we do at Esquartet.
Oh, that's great. Thank you for all of you for that. So kind of let's taking a look at it from the LOS integration perspective. So, you know, some of the LOS providers have larger market shares than others. Some integrate easier than others, but, you know, how critical is it? I would say it's probably very critical that they integrate, but tell me about how they plug into, you know, the services of the technology service providers plug into the LOS systems that the originators may be working with. And Brendan, do you want to start off that, or Jay?
Sure. I mean, I think you're right. Some LOSs are much easier to have an API with than others. Some of the complications are either driven by LOSs seeking rents, so that, you know, prevents people from wanting to have that LOS integration until necessary. In other cases, it's just, you know, technology that isn't as fresh as some of the new API capabilities of newer platforms. But in large part, I mean, there's quite a few kind of niche players in the market that have created businesses just around building APIs for people like Jay and Camelia and myself, where, you know, if a customer of ours really wants it, they can have it. Others build technology around not needing that API connection, just so that those rents that really don't need to be collected, and it cuts down on the cost to everyone involved in the transaction.
Yeah, I think that's great and very important, right? You know, if you want to implement this, you don't have to have the technology skill set in-house. You can purchase pieces of it elsewhere to get it up and running. That's great, Brendan. Thank you. Jay, I think you said you wanted to chime in there.
Yeah, you agreeing with what both of you said, and just expanding a little from our perspective. We're a point of sale solution, right? So on the point of sale, you could start at, like I mentioned before, you're starting at a very early point when the borrower is just starting working with maybe even a realtor, and it becomes a loan, and it's starting to establish itself and get processed in the LOS. So in our solution, if you have an LOS, we integrate in a way that the executed documents just flow back to the LOS, depending on the way the lender wants them, any LOS for that matter. So if there is that integration they already have with the LOS, we just slide in there as a point of sale solution and offer the entire journey, the loan officer experience, the borrower experience, and then for eClose specifically, the back office experience, where the experience actually turns into a digital asset, essentially, because your eNote is now your digital asset. So that's our integration piece with the LOS. But to Brendan's point, yes, the solutions are out there today for the lenders attending or listening in to say, as Camelia mentioned, look at your business case, start with hybrid, move to eNote, and then move to the notary solutions. A few years ago, all of this was not as possible, and I think Brendan's alluded to that a little.
Yeah, for sure. Excellent, thank you. Camelia, anything to add there?
Yeah, I agree with all the other panelists. I think the way that we think about it as well is those integrations are valuable. We have many of them, and they're important to be able to ensure, you know, data accuracy, data integrity, the ability to give lenders a seamless process. But it's also been super important to us to make sure that we stay agnostic, and that if a lender is using a particular doc prep provider that's working well for them, an LOS, a POS that's working well for them, you know, they should still have all of the same options of best-in-class digital close solutions, and not have to, you know, necessarily only use certain features or functions that the team provides or that the companies provide. So one example of that is, you know, our ability to automatically annotate documents and classify documents as e-signable or that they have to be wet signed is all based off of AI and ML. We don't rely on doc tagging, on X and Y coordinates. That all happens automatically, and it's agnostic to the tech that's already working well for a lender. So if they have providers, LOS providers, POS providers, doc prep providers that that are working well for them, they don't have to change anything to be able to start doing digital closings. And that's critical. You don't want to have to tell a lender, you have to rip and replace, you know, things that are working really well for you, these systems and processes that are what's kind of, you know, keeping the oxygen in your lungs and keeping things moving along, just to be able to do digital closings.
Yeah, I think that's really important, right? This all sounds very daunting, especially as you get into the GSE websites and look what it takes to get up and running. But the things you can do up front that are relatively simple, even before you get there, I think that's really important to call out. So thank you for doing that. Well, I think you kind of just did it for SnapDocs, but let's move on to the next topic. What to look for in the eClose technology service partner and why. So I know you just covered some of that, Camelia. I'll go back to you real quick. You know, from your perspective, what makes, you know, a company like yours stand out from others? Like I said, I think you just covered some of it, but anything else?
Yeah, I think for as much progress as we've made over the past couple of decades in digital closings, we still have a ways to go. We have a ways to go in terms of standardization across, you know, different trading partners. I think, as Brendan mentioned, you know, some inconsistencies in RONA legislation that's still being managed. And so the reality is lenders are doing a spectrum of digital closings. There's no lender that's out there doing 100% of the same type of digital closing 100% of the time. And so when you look at how you're going to approach your digital closings, you have to remember that you likely will be doing a number of types of digital closings and will have probably some wet still. And so it's important to look for technology providers that can support you for that spectrum of closings. And even to a certain regard, like helping you determine at the transaction level, like how digital that closing can be. Those are decisions that, again, a lender shouldn't, you know, no lender should have to be tracking. This is the glamorous job that we get to do. No lender should have to be tracking the status of e-recording by county, status of, you know, IPEN or RON legislation. You know, which one of their trading partners is taking e-notes, and what are the limitations of the types of e-notes that trading partner is willing to take. Those are decisions that can and should be automated for lenders so that they have a really high degree of confidence up front when they're making that closing decision, that they are getting that loan as digital as they can be without limiting, you know, any secondary market outcomes or the compliance risk.
Excellent. Jay, how about from your perspective?
So from a Simple Nexus perspective, I mentioned before, we're a point of sale solution, right? Your LOS, any LOS you're using, you could come in. We have various solutions. To Camelia's point, we find that lenders could be using various types of closing, including wet, and then the combinations that they need to use. Carrying on in that vein, we have to allow them to do what they are doing currently because it does work for them. So our solution allows for that. It allows for your combination of, if you want to do a wet closing, or you want to do a hybrid, or you're doing a hybrid with eNote, and where you can obviously attach the remote online notarization piece with the eligibility for that RON piece built in into the LOS piece. Because Camelia, you're very right, it does matter how much we can provide and how much ease of use we can provide lenders in the business to close loans, right? We are providing the solution on how they're going to close loans. So we want to be able to get them to expand on their efficiencies, the number of closings they can have, and make those selections as they need per loan. So you could have a lender who's doing 5 in a day that's wet closing. You could have them doing 8 RON closings. You could have them doing a few with an eNote. So you're able to pick from that. But you can carry on the Simple Nexus platform. Essentially, the borrower portal will give you the borrower as soon as they've signed the docs, executed, they show up there. And then obviously the vault solutions, you could keep doing, your back office teams could keep doing their parts. So from a what I think technology providers have taken upon themselves to provide the ease of close, it's almost like, I would say, we've built the guardrails, we've built the product, you need to come in and drive, right? Any of these solutions that if you look at, they're sitting ready for you. We have taken away the burden with these technology providers coming into effect of how you are going to integrate. We help you with the integration. We help you with the implementation of the tech stack. You have to bring your volumes in. And I think you truly start seeing huge savings, and I'm sure we will talk about that in a bit too, is when you scale. So I think we are looking for the folks to come in and let us help you scale. I'll let Brendan and Camelia add to that too if needed.
I mean, I think the optionality, right? Flexibility, optionality, all with a focus of taking friction out of the process is what will lead to success for all of us in this space. And you know, if the lender chooses to manage this process, then we want them to drop docs into escrow tab and select, you know, seller docs go to Ron, to our Ron functionality, the ancillary docs go to eClose, and you can IPEN everything else in every, you know, state in the country. So that is what everyone is striving for, right? The harder part, just to kind of move it back into the market a little bit more, is if that lender wants to do e-notes, the logic required of sending that PDF version of a note into our system, we create that smart doc e-note. We will have it auto-registered and auto-transferred to your counterparty so that the lender really doesn't need to put their fingers on it. And as long as all of that logic is built into it, that happens automatically and kind of takes part of that piece of it out of their process. And then they can decide, what registry do I want to register it on? Where do I want to go with the loan for my investor portal? And really just have that flexibility built into the system. I think that most lenders will see that trusting your title companies to move forward on the notarized piece is in a lot of cases the best option for them, and they can pull in that e-note when they're ready. But I mean, the e-note is frankly just harder because it's your and I hate saying that, having spent, you know, years with Camelia and Jay at MERS and really getting e-notes going, but that step of warehouse lender to investor to GSE, right? Like interim investor, we'll call them. That path is sometimes far more complicated than it needs to be. And there's been a lot of great work done at the MBA and MISMO to help ease some of that and try to build standards around it. But unfortunately, it's not there yet. So you need to kind of push the beast forward. And even with motivated lenders, sometimes MERS will not let them into their integration unless they have a really high percentage of their buyers ready for e-notes, and that, you know, slows people down too. So I think everybody needs to kind of treat it as a almost like a startup type market with e-notes to realize that it's not all going to be efficiency from the beginning, but without some of that inefficiency, it's going to be really hard on the e-note side to reach the ultimate goal. So from a technology perspective, we're starting to provide really great options that make it easier for the lender to move forward with it. Then they just have to map out the back end with their warehouse lenders and investors, and a few of them have figured it out. So we're hopeful to help a lot more get there.
Yeah, I can vouch for that from the correspondent investor side, Brendan. It's spot on. A lot of progress made over the last year or two. I think when it originally came out, it's almost like they didn't even think about the correspondent investor involved in the space, but that's been resolved for the most part. I think there are still some things that need to be worked out, but that's spot on point. So great call out there. All right, so that's great on selecting a vendor. So let's get down to you know, the real data. What data do any of you have on the impact of implementation with companies that you've worked with? And Jay, I think we're going to start with you on this one.
I'll add from the different perspectives. You know, from a recent survey we did, we got 100 responses back from a settlement agent, and that was very interesting to me, reading those results. is out of the 100, only one of them had not heard of eClose, which is great. Because I think a few years ago, if we had asked them, they would have said, yeah, we've heard of it, we don't know how to use it. But eClose solutions, everybody knows of, and there's a very small percentage not using it. You could probably, if we get into a deeper discussion, even know exactly which states may not be talking about eClose, because they're the ones potentially still filling out a manual 1003. That's how they want to do business. That's how they're going to stay doing their business. So in that, there was one that didn't know, and a couple of settlement agents actually have had responses back, one specifically saying that just with hybrid, they saved 60 pieces of paper per loan. So take into consideration, you started with a package, you printed it. If you had to redraw it even once or twice, that's how many times you printed paper. So you're driving efficiency from a lot of different perspectives, where now you're saving 60 pieces of paper per loan. You take that, and if you were spending about, let's say between, I go from now the settlement agent to a lender side, if you were spending $8, $9 FedEx shipping cost, about $10 per loan if you establish it on your copier. And in my previous life, that's what I did. I did all the closings, copies, shipped the e-note, shipped the paper notes out, ran correspondent lending side. So I was watching the interest on the warehouse line as well. Is you're saving $10, so a total of, let's say, anywhere between 18 to 19 per lender. Even if you take it at 200 loans that you close on an eClose or a hybrid with an e-note process, you're probably looking at per month with those savings at about 60,000 savings right away. So now a settlement agent can save, the lender can save, and you really are reducing any amount of paper that you have. So from a real, if you want to drive down into cost and efficiency savings, and we didn't even discuss their FTE efficiency. So per closer you have, you could potentially close more loans if you're going the electronic route. So there's all these different considerations to have. And if you take a moment there and visualize everything we have talked about, that, hey, the technology's there, start, we'll help implement on the tech stack, and we'll help you integrate into this world with everything that Camille and Brendan has said. Yes, there is a ramp up, right, to the integration, because you really have to understand what the roles in paper were for all the parties we discussed, but there's also explicit roles in the e-world. I think you'll start seeing that. I'll say it again, we've built the guardrails, you just have to put the volumes in there now.
That's great. Brendan, how about you next year?
Yeah, I mean, Jay hit on the paper part, and as a conservationist who likes to hike and fish and hunt, I like taking the paper out of the process. Makes it harder to hunt, but I'd rather have more deer in the woods. Just from a lender perspective, we see, like, these are some numbers that some of our clients have given us. 48-hour decrease in time to deliver funds, 80% reduction in post-closing labor costs, 95% improvement in speed of delivery of the note, obviously when you're using an e-note, and then 90% quality improvement from borrowers, like happier experience, better experience from the borrower. Those are what we care about from an industry perspective, right? At the end of the day, you want the borrower to have to walk away with a good experience, particularly if you're a servicer and you're looking to do business with that customer again. We don't want to have to lenders don't want to have to redo the work that that kind of could have been done previously and may have been done, but just want to do it a second set of eyes. And then just speed, in this market, when you look at rate locks and time to close and the market moving, it's becoming a bigger problem, right? And making sure that the lender doesn't get squeezed in this piece of the process is important, because it just means more capital that you have to hold as a lender and more hedging risk, or maybe you start hedging and then if you hadn't hedged before. So in this market, you can see just a tremendous amount of value.
Excellent. That's fantastic. So that's very helpful there. A lot of huge benefits, and I think you guys touched on a little bit. It just the technology piece is one part of it, with the rest of the cost of the organization and where they need to go. So I think one thing I want to throw in here before we get to the implementation timeline, right? So we know the technology's there. We know there's benefits for it. So what have you all seen in terms of the challenges of getting something implemented within the organization, right? So this obviously takes buy-in from the team, everyone in your organization, and a commitment to, hey, we're going to do these things electronically from this point forward, kind of thing. But how do you sell your staff on this? Anything that you have seen? And I'll just kind of throw it open to any of you who have a response there.
Yeah, I think this is, well, first of all, I want to say I can't get out of my mind the picture of Brendan in a tree stand. And I think the next webinar, I'd like to see you in the tree stand talking about digital closings.
I'll stop by with some stuff to share, Camelia.
But yeah, I think this is, Greg, a perfect example where the tone does need to be set from the top about the why. Like we're not talking about, the ability to e-sign documents. I was actually, I was able to kind of sit into a CEO explaining to his pretty big team why they were prioritizing digital closings and e-note adoption. And I really like the way that the concepts were put. Like, when you think about the asset that's being created in our industry, we sometimes think about the actual property or the house that's being acquired, but the actual asset, right? What do we know is the actual asset that's being created and being bought and sold? It's that loan. And more frankly, it's that note, right? And so the better, faster, less expensive, more accurately we can do that, the more quickly we can move that. It's a better outcome for everyone, from the lender, the borrower, maybe not the warehouse lender, but really everybody else, right, that's in that chain is going to benefit from that better quality collateral, having their access to it sooner, having more data around it sooner. But when you get to the boots on the ground that actually have to effectuate this change, a lot of times you're like, well, wait a minute, why do I need to do this differently? And if they don't understand what those outcomes are that they're part of driving, and why that's so critical to the organization's success to start seeing those cost savings, a lot can get lost along the way. Because what we are talking about, I think Jay and Brendan both hit on this, is there's a lot of change management involved. More so when you get to the e-note, less with hybrid, but when you get to the e-note, almost every single activity from pre to post closing, every interaction with that loan will look a little bit different because of the way that loan needs to be delivered, transactions that need to be initiated through the e-registry. But the sweat equity definitely pays off. I mean, with e-note, some of the stats Brendan talked about, we also see them. Delivery times are reduced to, the GSEs will fund an e-note within a business day. So from a capital efficiency standpoint, that's tremendous. There are rumors that there are some aggregators that are looking to pay up for e-notes, and I think if that starts to happen, then the game will truly change. I see, Greg, you taking a note there. But just back to your question, that yeah, you need to do the impact analysis, make sure that everybody on the team understands what looks different, make sure that they're not conflating paper processes with e-processes. I've been in offices where people were still doing stare and compares of e-notes and not leveraging the data that they now have access to. So take the time to do the business process re-engineering so that you can see that ROI, and make sure everybody on the team feels like they're part of this sort of success story and kind of understands the why. Some of the biggest eClose successes that I've been fortunate to be a part of have started with that tone being set the right way from the top.
That's fantastic, Camelia. Thank you. Jay or Brendan?
I think I'll, everything Camelia said, right? Said it from the top. And I'll add to that, the one piece is, if there are folks in organizations that think if it's an LO, it's a closer, it's a post-closer, it's a shipper, that thinks that that eliminates any roles. That's not true at all. It adds efficiencies. So, and the example that I've thought about from just doing this a very, very long time is when DU first came in the 90s, everybody thought the underwriter role was gone. No, underwriters are probably most sought after in the mortgage industry even today. What it did give them, and what gave us as an industry, is the ability to do more loans. We expanded where we could do credit very, very greatly. So with closings, I look at it, if you start from the top, you train your loan officers, you talk to people that are going to actually be the boots on the grounds. Don't we have the potential of expanding the number of loans a person does in their lifetime? Currently it's 7 to 11. It could get to 11 to 15 because you're adding so much efficiency and taking everything we're talking about is you're expanding the liquidity in the market. So you add all of that, you add savings that can occur. Eventually our goals are to really pass on some of those savings, and as they get spread, we will see increase in the number of loans over time per person that get done. And I think fully that those will get to 11 to 15 compared to the 7 to 11 now.
Excellent. Thanks, Jay.
One thing that I would add just on the implementation timeline is that one of the leadership roles that can be driven on the lender side, without them having to do anything, they can get the notarized documents completed because all the states either have or don't have laws and rules on the books around electronic notarization. And so in some places you can do RON, in some places you can only do IPEN. But the point is, these are legal processes that notarized documents can be completed in. And lenders only need to tell their title companies and that we will buy legally signed documents. It's literally as simple as that. And leave it to the title companies to carry the risk that they currently take. And some lenders are doing this today, but I think other lenders, when I talk to regional title company, you go to a state like North Carolina where it's an attorney state and there's usually attorney offices that are overseeing the closing. It really comes down to, sometimes they'll say, well, I haven't heard from the lender. Well, the reality is, it's really the title company's responsibility to make sure that those documents are signed legally in that jurisdiction that they're being signed. And I think everyone's kind of looking for just that last, little push to say, yeah, of course, we will accept legally signed documents. If lenders just say that, a lot of this kind of friction gets taken out just simply from that. And then you can really focus on, the lender can really focus on, how much gain do I really want to get? Like, do I want to take the e-note? And if so, I can work on the process with my buyers and warehouse lenders and everyone else. But it really isn't a whole lot of holdup or responsibility of the lender to do much, depending on the technology, of course, but to do much other than to say, yes, I accept legally signed documents. You go figure out what's legally signed and make sure that the platforms being used are, in fact, meet the requirements of that state, because some states require that the platform be approved or, of course, that the notary stamps be created legally. And if you look around the country, most of these closings are overseen by a woman-owned, very often minority-owned business that is an independent business in that state. And we need to continue to support independent businesses in this country. I feel very strongly about it. And we can give them the technology for themselves to be more efficient, and they love it, right? Like they want to do their job better. They don't want to run around and chase paper because some someone wasn't accepting of what the law allows them to do. And if we want to keep and let these small businesses thrive, then it takes coordination of everyone, and it doesn't require lift on everyone's shoulders. It just requires them to accept what is legal in those jurisdictions.
Excellent. Thanks, Brendan. Okay, very good. Now, and I know this next question is a little, probably way too broad, not a little, a lot broad, but just starting from the beginning, as you've all talked about, like what Brendan, you just went through and, working with your title company, kind of what kind of implementation timeline have you seen for anything that you can frame up for us? Like I said, this is pretty general, but anything you can frame up for us there?
Yeah, I mean, we start with title companies in the matter of, realistically, like 2 weeks. We as long as their notaries have their electronic stamp, we're able to load those up into our system and get them trained on the software in 72 hours. So then it's just about testing and making sure they're comfortable with it and moving ahead. So that part for us, because we don't rely on an integration with the LOS, we don't rely on an integration with the title software, that the ability just to drag and drop a document into the software and have it prepped, and the flexibility that it doesn't matter, like Camelia mentioned earlier, it doesn't matter what LOS it's generated by or what doc generation company created the document. It's really just about dragging and dropping a PDF into the software and then having the ability to assign it to a notary, and that notary then meeting with the borrower and signing it. And then those documents are immediately accessible to the borrower, title company, and lender. So that the setup can be very easy. And then it's just about what type of title company, right? If it's refis, title companies that are doing refis typically like to have a much deeper conversation with the lender itself. On the purchase side, it's often a little different. That title company is really taking on a little bit more responsibility, and in that case, they often view it as their job to make sure that the loan was signed and closed in accordance with the laws of the jurisdiction that they operate in.
Yeah, great. Jay, Camelia, anything else there from an implementation timeline?
Yeah, I would agree with that. I think that the technology is frankly the easiest part. If you were to take the technical implementation steps and like plot them on a calendar, you could easily cram them into a matter of weeks. The reality is that, and I think others on the panel lean pretty heavily into that change management and supporting lenders with sort of developing the strategy for this implementation. And so, it's really all about meeting lenders where they are. If you have a lender that's kind of done the homework and knows, this is how EA can be, and this is my target for these branches. We've seen lenders get to 100% of closings, some form of digitization in less than 90 days. Where again, depending on the prioritization and how the lender's thinking about this effort, you can easily drag this out too. Not that we'd recommend that, but I think the key goes back to, if you can make this the default closing option, that the default is actually as digital as it can be, and only if there is some sort of exception, or of course, if the borrower does not want to sign electronically, do you revert to wet? That is an easy way to drive success on these types of implementations and to drive adoption, both in, particularly internal adoption is key, is so that it defaults to that closing type. Another thing that Brendan said, and I just want to add on to, is that I really like the point about my experience and our lenders' experience is that it's really a myth that settlement isn't willing, ready, and or capable to facilitate digital closings. And one of the ways that we're trying to, not just the transparency around that, but the transparency around, a lot of lenders just don't realize how digital they actually can be. There's a lot of confusion around like, oh, well, there's not e-notarization legislation here, so I can't do an e-note, or I can't do an e-note because there's no e-recording. And so there's a lot of conflation and confusion around like how can a lender actually be. You know, the note's not typically notarized, it's not recorded, you can still get to eNote. And so one of the initiatives that we've been supporting and have partnered with MISMO on, it's really for the benefit of everyone in the industry, including all the technology providers, is to build an e-eligibility exchange for the industry that's free of charge at no cost, that has, you know, to Brendan's point, the status of RON and IPEN legislation in every state, what an investor is willing to accept. So far, Ginnie Mae and Mr. Cooper and Freddie Mac have already gone in and put in their digital closing acceptance criteria. I hope to see Greg and Marathon in there next. But for lenders to be able to tap into that, but most importantly for their technology providers to be able to leverage a single source of truth as to how digital that closing can be, because more often than not, lenders can actually be more digital with that closing than they think. Even if they're selling best X, they can typically say, well, okay, maybe I don't know the investor, but I know these other things, and I can go with the, you know, the most common denominator and still get as E as I possibly can. So we're really excited about that, and if you have a chance, go to the MISMO website and you can check out the e-eligibility exchange and see a lot of those stats that Jay and Brendan were talking about as far as e-acceptance being really further along than people think it is.
Excellent. Jay?
I would have to agree with the 72 hours if we're looking at a number. I think and with what Camelia said, just split it up to say, one is you're starting, right? So whatever time you're starting with, meet your technology provider there. But then second part is, how long will it take for you to just turn on all the features based on the impact analysis you've done? Do you want your borrowers to sign a little earlier on the hybrid side? What do you want? Do you want them to view the documents? So the tech stack turning on is no more than your 72 hours. The real time comes in is what commitment the lender's making, where are they at, how much research have they done? And going back to what we originally said, how collaborative are they with all their trading partners and understanding what they're going to do with each of these folks? So if you only just take that piece and say, an actionable item, if you're listening today, is I'm going to start. Start is I'm sending an email to each of my trading partners. You're communicating with them all day on paper. This is no different. You start there. You go in and you talk to a technology solutions provider and just say, I'm going to implement, turn the switches on. I'm not using it yet because it may take me time to integrate. And then what Camelia said is, how long is it taking you to really establish what that impact is to you, are the three components. And those, I have seen some lenders, you can actually do it in a matter of weeks. Others, average is about 4 weeks. And I can add to what Camelia said, it can be very much longer. I've seen it where they just, you skin your knees a little bit and you're like, I'm not getting back up. I'm just here. You have to be willing to skin some knees, you know, put that Band-Aid on and keep moving. And you're going to then bring it back into the timeline. The most problematic piece I've seen is resource turnover, right? You have somebody that had worked on it, ready to go live, and then that resource is gone. So you've lost a champion. I think that just keeping your group together will really get you to doing your first one. And all it takes is one or two. I've had comments made from lenders that have said, we did not realize how much support there is in this e-world compared to the paper world. And I was like, yes, that's where we are at. A few years ago, you might not have been there, but that's what it's at. And how much they just, the words coming out are, wow, it was amazing. Click off a button. I can do it from anywhere, right? We're giving all these provisions to LOs, to borrowers. Think of your staff too. Your staff can really function from anywhere once you establish this piece. And nobody's cut out. I think somebody being cut out of the process is just a myth. So it's almost like you can dictate your own implementation timeline.
I would say that that's probably very true there, Jay. Thank you. Well, I don't see any questions in the chat. If anybody on the webinar has any questions, pop them in the chat real quick. I'll try to delay here for a moment while I'm thanking all of the panelists, Brendan, Jay, Camelia. Obviously, you all have vested in this process and in the industry, clearly experts across the spectrum here, and I truly appreciate, number one, you attending, but also your expertise and contributions to the webinar. Still no questions, so John, I'm going to turn it over to you for any wrap up that you might have, and
sure.
And thanks to everyone.
All right. Well, look, thank you all for participating today, and thank everybody for who's attended for attending our webinar today. And if you would like to reach out to any of the participants, of course, here's our contact information. We will be distributing a survey shortly after the conclusion of this webinar. And if you could all take a moment to take a look at it, fill it out, that would be fantastic. If you have any ideas for future webinars, we'd love to hear those ideas as well. So again, thank you all for attending, and make it a great day.
Thanks, everyone.
Thanks so much for having us.
Bye, everybody.
Bye.